Making money with cryptocurrency can be a viable option for introverts who prefer working independently and remotely. Here are some strategies that introverts may find appealing. Trading. Day trading. Engage in short-term trading by buying and selling cryptocurrencies within the same day. This requires careful analysis and monitoring of market trends. Swing trading. Take advantage of short to medium-term price movements, holding onto assets for a few days or weeks. This allows for more flexibility in trading times. Long-term investing. HO dealing. Buy and hold onto promising cryptocurrencies for an extended period. This strategy requires patience and a belief in the long-term potential of the chosen assets. Staking. Some cryptocurrencies offer staking opportunities where you can lock up your coins to support the network and earn additional coins as a reward. This requires minimal active involvement. Mining. If you have the technical know-how and resources, cryptocurrency mining can be a passive way to earn. However, it requires a significant initial investment in hardware and electricity costs. Freelancing. Offer freelance services in the cryptocurrency space, such as writing, graphic design, or programming. Platforms like Upwork and Freelancer often have jobs related to blockchain and cryptocurrency projects. Content creation. Start a blog, YouTube channel, or podcast discussing cryptocurrency topics. Monetize through ads, sponsorships, or affiliate marketing. Automated trading bots. Develop or use automated trading bots that execute trades on your behalf based on predefined criteria. This allows you to trade without constant manual supervision. Educational content. Create and sell educational content, such as online courses or ebooks, on cryptocurrency-related topics. Many people are interested in learning about blockchain technology and how to navigate the cryptocurrency market. Participate in airdrops and bounty programs. Join cryptocurrency projects that distribute free tokens through airdrops or bounty programs. This can be a way to accumulate assets without a financial investment. Peer-to-peer lending. Participate in cryptocurrency lending platforms where you can lend your digital assets to others in exchange for interest payments. Remember to conduct thorough research before engaging in any of these activities, as the cryptocurrency market can be volatile and risky. Additionally, consider diversifying your portfolio to minimize potential losses. User. Day trading. ChatGPT. Day trading involves buying and selling financial instruments, such as cryptocurrencies, within the same trading day. The goal is to take advantage of short-term price fluctuations and make profits based on intraday market movements. Here are some key points to consider if you're interested in day trading cryptocurrencies. 1. Education and research. Before you start day trading, it's crucial to have a solid understanding of the cryptocurrency market, technical analysis, and trading strategies. Stay updated on news and events that can impact the cryptocurrency market. 2. Risk management. Set a daily or per trade risk limit to protect your capital. Only risk a small percentage of your trading capital on each trade to minimize potential losses. Use stop-loss orders to automatically sell a position if it reaches a certain price, limiting your losses. 3. Choose a reliable platform. Select a reputable cryptocurrency exchange with low fees, a user-friendly interface, and reliable security features. Ensure the platform provides real-time market data and charting tools for analysis. For technical analysis. Use technical analysis to identify potential entry and exit points. Common technical indicators include moving averages, relative strength index, RSI, and Bollinger Bands. Analyze chart patterns and candlestick formations for potential trading signals. 5. Develop a trading plan. Create a well-defined trading plan that includes your risk tolerance, profit targets, and entry-exit strategies. Stick to your plan and avoid making impulsive decisions based on emotions. 6. Leverage with caution. Some exchanges offer leverage, allowing you to trade with borrowed funds. While leverage can amplify profits, it also increases the risk of significant losses. Use leverage cautiously. 7. Trade liquid pairs. Focus on trading cryptocurrencies with high liquidity to ensure that you can easily enter and exit positions without significant price slippage. 8. Set realistic goals. Set achievable daily or weekly profit targets. It's essential to be realistic and not chase after unrealistic gains, as this can lead to poor decision-making. 9. Practice with a demo account. Many exchanges offer demo accounts where you can practice day trading without risking real money. This allows you to refine your strategy and gain experience before trading with actual funds. 10. Continuous learning. The cryptocurrency market is dynamic, and successful day traders continually adapt and learn. Stay informed about market trends, new trading strategies, and evolving market conditions. Remember that day trading involves significant risk, and not all traders are successful. It requires discipline, emotional control, and a commitment to ongoing education. If you're new to day trading, consider starting small and gradually increasing your exposure as you gain experience and confidence. User. Long-term investing. ChatGPT. Long-term investing in cryptocurrencies involves holding onto digital assets for an extended period, often several months or years, with the expectation that their value will increase over time. Here are some key considerations for those interested in long-term investing. 1. Research and due diligence. Conduct thorough research on the cryptocurrencies you're considering for long-term investment. Understand their technology, use case, development team, and overall market potential. 2. Diversification. Diversify your investment portfolio by spreading your funds across different cryptocurrencies. This helps reduce risk by not being overly reliant on the performance of a single asset. 3. Choose established projects. Focus on well-established and reputable projects with a proven track record. Look for cryptocurrencies with strong fundamentals, active development teams, and a clear use case. 4. Stay informed. Keep yourself updated on market trends, technological advancements, and regulatory developments that may impact the cryptocurrency market. 5. Long-term vision. Have a long-term vision for your investments. Cryptocurrency markets can be volatile, and short-term price fluctuations are common. Avoid making impulsive decisions based on short-term market movements. 6. Secure storage. Use secure wallets for storing your long-term investments. Consider hardware wallets or cold storage options to minimize the risk of hacking or unauthorized access. 7. Ignore short-term noise. Long-term investors should avoid being swayed by short-term market noise. Focus on the overall growth potential of your chosen cryptocurrencies rather than day-to-day price movements. 8. Reinvestment of profits. Consider reinvesting profits from successful investments into other promising projects. This strategy can compound your returns over time. 9. Risk management. While long-term investing is generally less risky than short-term trading, it's essential to have a risk management strategy. Only invest what you can afford to lose, and avoid putting all your funds into cryptocurrencies. 10. HODling. The term HODL originated from a misspelled word hold and has become a mantra for long-term investors. It emphasizes the idea of holding onto your investments despite market fluctuations. 11. Tax considerations. Be aware of tax implications associated with long-term investments. Consult with tax professionals to ensure compliance with local regulations. 12. Regular evaluation. Periodically review your investment portfolio and assess whether your chosen cryptocurrencies still align with your long-term goals. Be open to adjusting your strategy based on market conditions. 13. Patience. Long-term investing requires patience. Prices may go through ups and downs, but the key is to focus on the potential growth of your investments over an extended period. Remember that the cryptocurrency market is still relatively young and can be highly volatile. While long-term investing can be a more conservative approach compared to day trading, it still carries inherent risks, and market conditions can change. Always make informed decisions based on your risk tolerance, financial goals, and a thorough staking is a process where individuals participate in the validation and confirmation of transactions on a proof of stake (POS) blockchain network. In return for their participation, stakers earn additional cryptocurrency rewards. Here's an overview of how staking works. 1. Understanding proof of stake. Staking is commonly associated with POS blockchain networks, which differ from proof of work (POW) networks like Bitcoin. In POS, validators are chosen to create new blocks and validate transactions based on the number of coins they hold and are willing to stake as collateral. 2. Choosing a staking coin. Select a cryptocurrency that supports staking. Popular staking coins include Cardano, ADA, Ethereum 2.0, ETH, Tezos, XTZ, and many others. Ensure that the chosen coin is compatible with the staking mechanism. 3. Wallet and staking platform. Obtain a wallet that supports staking for the chosen cryptocurrency. Some cryptocurrencies have specific wallets or platforms dedicated to staking. This can be a hardware wallet, software wallet, or a staking platform provided by the cryptocurrency project. For acquiring and locking tokens. Acquire the cryptocurrency you want to stake and lock a certain amount of tokens in your wallet or on the staking platform. This locked amount serves as collateral and determines your chances of being selected